Today, we are going to share some secrets on how to keep more income for yourself and give less of it to the IRS, but all legally and IRS supported, of course, through tax credits. We're going to discuss which tax credits most small businesses miss taking out, which credits give the best bang for the buck. We'll talk some sketchy tax credit situations to avoid, and whether your accounting firm should be handling tax credit yourself or looking to outsource it to a partner. All of this here on Drink While You Think, the happy hour conversation between a couple of guys building their firm in really weird ways. Let me tell you about our sponsor today. And our sponsor is TriMerit. They support CPAs, CFOs, and owners of small to mid-sized businesses by serving as an extension of their advisory team to lessen the tax burden and increase the cash flow. TriMerit turns a complex process into a refreshingly straightforward experience that requires minimal time and effort from CPAs and their clients. Yeah, we're talking about tax credits. They help get tax credits for small businesses and mid-sized businesses. So let's welcome here to the show. I'm your co-host, Kenji. My other co-host there is
Matthew. And I do the sponsor thing better than you. I'll do it back next time. Sorry.
He'll do it next time, but I had to cut some slack for him.
Welcome to Drink While You Think. TriMerit today is our sponsor. Remember how you sponsor Drink While You Think? All you do is send us beer. There you go.
It's just that easy. All right, Randy, we are happy to have you here, my friend. Randy, tell us who you are, what you're up to, and then finish us up with what are you drinking today?
Oh, definitely a couple of things. Did my marketing department write that intro? That was really good. So I don't know if that's that's our thing, but I appreciate that. That is what we do. So just real quick, you mentioned TriMerit. That's the company I'm with. I started TriMerit 15 years ago. We are a national specialty tax firm supporting the CPAs, like you said, and I get to do fun things like drink beers with you guys, and that's really my job is drinking beer and doing a little tax talk. You didn't tell me we're going to talk tax. I thought we were just going to drink beer, but I can talk tax too. So
we're going to mix the two, which actually you're the perfect person to do that with, because it's. Before you tell us what you're drinking, tell everyone else what else you're involved with.
Your side gig.
My side gig, my side hustle.
Your side hustle, as the kids say. What's your side hustle?
My side hustle is how many years ago now? Let's say it's about 6 years ago. I got involved with a gentleman, Chris Quinn, and Chris at the time had a liquor store, a craft beer store called the Beer Temple. And he and I started talking, we hit it off. And one that we ended up doing is extending this into a bar and a craft beer store. So I am now very happy partner at the Beer Temple bar and liquor store in Chicago.
Oh, that's awesome.
That's awesome.
And one step further, a very highly acclaimed craft beer and a store and bottle shop. Everybody puts out lists on craft beer bars around the country, around the world. The most recent list I saw, we were the 14th best, highest rated craft beer bar in the world. So it's a pretty cool thing to be part of.
So a drink while you think. Perfect guest. So
perfect guest.
So tell us what you're drinking. Like, this is going to be high pressure for this brewery, whoever you pick today. So, who are you drinking?
So I picked, and I'll tell you why. It's kind of an iconic Chicago beer. I'm guessing nobody around the country has heard of this, but the beer I have is called Jungle Boogie. Jungle Boogie by Marz Brewing, which is the south side of Chicago, and this is a pale wheat ale that's brewed with rooibos tea. And at the end, I'm assuming we'll talk about that type of thing, but this is the beer I'm drinking today.
Oh, nice. That's cool.
And in my TriMerit branded glass or my Beer Temple branded glass, I got to figure out which one. So
I always go with the bigger one. That's
what I'm going to do.
There you go. All right, Matthew, what about you?
Oh, Kenji, you're going to pour, so you tell us.
Okay, I'll tell mine first. I'm doing this again. Randy and crew from TriMerit sent this, the Vallejo IPA. This is from Half Acre Beer. Randy and I were talking about Half Acre. They're kind of some OGs, some of the original kind of craft folks in Chicago. It looks like it's a 6.7%. And this is what Randy and I do because we're professionals. We use a glass, Matthew. He always makes fun of me, Randy.
Yeah.
So Matthew, what about you?
So I'm going with Gorilla Cookies by Saint Errant Brewing, also in Chicago. I'm really excited about it. It's it is my kind of beer. Imperial stout with hazelnut, cinnamon, coffee, and cocoa nibs, not just cocoa. And it is an 11%er.
Whoa.
And so that is the kind of day it's been. So that'll be good. So cheers, everybody.
Cheers, guys.
Cheers.
Randy, thank you, sir.
I have to tell you, when I heard about your show, I actually did everything I could to force my way in here. So thanks for having me.
You did it well. I have a feeling this is not going to be the last time people see Randy on the show. We're going to need some other expertise beyond tax credits. I guess before we jump into tax credits, you mentioned quickly, like, were you a big craft beer fan prior to kind of, going to the beer temple, or how did that even start out?
So I can make a long story really long, so I'll try to keep it short. I've always enjoyed what I thought was a better beer, even in college. I would drink a Michelob or a St. Pauli Girl instead of an Old Milwaukee or a Stroh's, although Stroh's was not bad, but I'm aging myself a little there too. But yeah, about 10 plus years ago, probably a little longer, 15 years ago, I started traveling. When I was traveling, I saw these breweries around the country, little breweries pop up, and I'm like, okay, this is interesting. So I'd go and try their beers and just had a good time. And that passion just grew over the years. And then again, I'm trying to make this short. 8 years ago, I was really into craft beer. I actually had a stroke. And when I was recovering from that stroke, and I'm fully recovered, which is, I am not the norm with that. I'm very blessed with that. Yeah. When I was recovering from it, I was just walking around our neighborhood, listening to podcasts. And one of the podcasts I was listening to was the Beer Temple podcast hosted by Chris Quinn, who is now my partner. And that's how we really got connected. I got to know him before I even met him, which was pretty cool.
Wow. It's okay. So podcasts bring people together.
Just a second. I have to interrupt here, and we usually check in on how the beers are. Randy, you can pick my beer anytime. Kenji, this is like, he hit me on the nose. I know you picked this one out for me.
Oh, I did.
This is a good beer. Oh my God, stout people, go to Chicago.
Chicago does some very good, when I'm assuming they call it this around the country, but pastry stouts. There's very, very good pastry stouts being brewed in Chicago.
Well, and some surprisingly good West Coast IPAs here. This is outstanding.
So it's funny, and we're never going to get to tax credit, which is fine with me. But it's funny because I was having that discussion today. I was like, okay, why does Chicago not have any really good West Coast IPAs? They make some good IPAs, they make some good pale ales, but the West Coast, to me, a Swami out of Pizza Port, or a Amalgamator out of Beechwood, or even the obviously Russian River Pliny the Elder, which is, I'm wearing a Pliny sweatshirt today, nice. Or a Russian River sweatshirt. But then the Vallejo, I was going, oh yeah, the Vallejo is a really good beer, and so it's funny you said that. It is very good.
It's very solid. Again, Chicago, it's getting to be about the time. We'll be a little bit of our Chamber of Commerce here before we get the tax credits, but I'm telling you, weather's starting to get good. I don't think there's any better place for eating, drinking, festivals than Chicago in the good weather. It's fantastic. So
in the summer
for Chicago in the summer, however.
Yes.
All right.
And just so you know, we're respectable. Pliny the Elder did make an appearance on Drink While You Think.
Really?
Yes.
Yep. Our friends at OnPay sent us Pliny the Elder.
OnPay,
and even I liked it.
Yeah,
as an IPA. So
that is iconic. It's a great beer. I spent all of February in living 25 minutes away from both their breweries. So I had quite a few Pliny the Elders earlier this year, and very fortunate got to have Pliny the Younger too, which is
wow. That's awesome.
I think that's my fourth time maybe having Younger, and it's just a really cool experience.
I'll say it is. I think it's one of the cool things about beer is I had that exact same experience by traveling. There's always a brewery or somewhere to go. And it's just such a good gathering place for people. Just I think it's awesome to go do while traveling. You and I were just talking, Randy, about little small towns in Illinois where I grew up as a kid that were like, I would never imagine have breweries, and they do now. So anyway, cool thing. If you're out traveling and you like beer, like trying out beers, check it out next time you're out and doing it. So, okay, let's get to the accounting, the really exciting stuff here on tax credits.
Enough of the boring beer
Boring
talk.
beer
Let's
stuff.
talk about the super exciting
Yeah,
tax credit talk, which it is. It is exciting. So
what out there right now do you think is the low hanging fruit of like tax credits, Randy? Like what's the stuff that like is just,
well,
everybody's looking at?
Yeah, there's an obvious one right now. There's an obvious one that everybody in the country is being contacted about, telling them that they qualify and they don't all qualify, which is the employee retention credit. This is the most obvious one. Everybody should look at it, but you have to qualify. There are requirements. It's not just I'm an existing business and so therefore I qualify. That's not the truth. And I hear this way too often. So, but if you do qualify, and I won't go deep into it, but if you have a drop in revenue in 20 or 21, you want to look at it, or if you were affected by some government mandate that restricted your ability to conduct your business, you want to look at it because the values can be huge to the standpoint. If you're a 10-person business and you qualify the entire period, there's $260,000 of refund checks sitting out there for you. So that's why it is being marketed hard, but that's also why there's a lot of misinformation out there.
Are you having to help unwind that for people? I mean, are you running into situations where people have chased that kind of rabbit, and it's been an incorrect assumption that they should get it? Are you having to help out in those cases, Randy?
It's happening daily.
Yeah,
Daily. And we're very fortunate. We work with CPA firms, tax preparers around the country. When I say CPA firms, I'm saying, I mean, obviously I'm proud I'm a CPA, but I'm tax preparers, EAs, CPAs, and we deal with them around the country. And so I get calls and they realize that we are, and this is my opinion, but I think people will support that. We do it right. And they understand that. And so when their client calls them and say, their client is whatever, pick an example, a law firm, and they say, yeah, someone told us we qualify every quarter and we got $2.5 million of credit sitting here for us. We got to start taking this. That's when the tax preparer will call me and say, hey, let's look at this and see if it really does. Now, I had that exact scenario yesterday where when we looked at it, they did qualify, but it was for 2 months. There was a 2-month period, but that 2-month period was still a very significant refund check for them. They did not qualify for 6 quarters is what they were being told they qualified for.
Gotcha.
Beyond
beyond that, like I think the ERC, is there anything else that, I know that you guys do a wide variety of tax credit work beyond like ERC. What's probably the other one that's next in line, like most popular, or at least that people should be looking at that people may not be aware? I mean, I guess ERC in some ways, everyone's getting hounded for that one.
They are.
Is there anything that people may not be thinking of that like, geez, more people probably qualify than they realize?
I think there's 2. Let me start with R&D tax credits, and you wouldn't right away. People are tuning out. Okay, I don't have any manufacturers. I don't have anybody that deals with R&D tax credits. Well, research on the tax credit is mainly used by manufacturers, but software developers as well is a second biggest user of the credit, or anybody that develops software for their own use potentially, and that's where it's missed a lot. Because I'll give you an example. We talked about the Beer Temple, the bar I'm part of. We have a very robust delivery program around the country. We delivered beer to you guys, but we have a store online that people can order, which is getting ramped up because it's pretty ugly right now. It was going well. We're switching over to a new program. So it'll be a week on Monday, I don't know when you release this, but on Monday, the new website goes up. The bottom line is that online store consisted of software development. So we had to develop the software for that online store. And we also had to develop software to have the online store talk to ShipEasy, talk to BigCommerce, talk to our inventory control, talk to FedEx, and creating all that software to make all these components speak to each other is R&D. And so we have a bar, a liquor store that is taking an R&D tax credit. So that's where you can't, especially with the last 2 years, with people had to be more technically savvy, and retail stores had to turn on to online stores and whatever else. You have a lot of hidden R&D tax credits sitting out there probably these days.
Yeah, I think still one of the biggest problems with the R&D tax credit is like with, how we take CPE and stuff as CPAs. The first time we took CPE and R&D, you could only get it as a tax refund. And a lot of people missed when it switched to a payroll tax credit for the people that aren't making money, like venture-backed companies with software and stuff like that. So some people don't know. A part of our education is like, because the same thing happens then in the community, right? Where the startups are like, no, my last startup, we couldn't take that because it was deferred. It was just in my NOLs and I'm not paying somebody for an NOL.
Right.
So now you can get a US federal payroll tax credit for R&D tax credits too. And I think that's what people miss a lot of times. It's just this is one of those unfortunate things as things evolved. Us trying to keep up with everything is tough as CPAs.
Right.
Oh, absolutely.
You
As
can't do
CPAs,
it,
especially as a small business owner, right? You just think to yourself,
Oh yeah, much less the small business owners.
Logically, you're like, well, let's say I'm losing money. I'm a startup that's raised a couple of rounds. How am I going to be eligible for a tax credit because I'm on the other side of this? And they like, well, wait a minute, there are the payroll tax side of it. So yeah, there's some things there. Interesting. Okay.
Yeah, and that was a big deal when that came out in 2017, I think was the year. 16 maybe it was defined, 17 maybe was the first year. And times doesn't mean anything anymore, but whatever it was, I wasn't sure how many of those we would do because it's a smaller business, less than $5 million of revenue. But most of them are technology based that are taking this, and they put a ton of money into R&D. And so we ended up doing way more of these payroll tax credits than I originally thought. And that's a huge part of our business now.
Wow.
Yeah.
That's awesome. That's awesome. And there was another one, Randy, what comes, you mentioned there was another one that came to mind too, that people may not be thinking of.
So the one that they don't think of, and it's not as sexy maybe as the other ones, but it's the WOTC, the Work Opportunity Tax Credit. And the interesting thing about this is it's a new hire credit. Well, we got a lot. That's why I wanted to bring that up. We have a lot of new hires out there right now, and a lot of people, even if they're not in the workforce, changing jobs as well. But it's really an incentive for people to hire individuals that have some kind of barrier to being hired, an ex-felon, ex-military, living in certain geographic areas that may not be as affluent. And so now if we hire people in those areas, there's tax credits there. And so
the military one is the biggest, right? In that one, like it's a huge one.
Yeah, it's up to $9,600 a credit
per person, right?
Yep, per person. And there's different categories of the military credit as well. There's certain that are 2,400. There's others that are 9,600. The interesting thing about, Matthew, you brought that up, the military version of the WOTC can be taken by nonprofits as well. And even though it's a tax credit, it's kind of similar to the R&D. We can use it to offset payroll taxes for nonprofits.
Oh,
like a grant. Yeah.
Yep.
Yeah, that's interesting. Holy cow.
When I have talked to startups and other people about that and other companies, they kind of gloss their eyes over until you say military. And you're like, and then they're like, that's really, really good kind of stuff there. So
no, that's a good one, especially these days. There's 3 other things we deal with too, but those are the ones that are probably the most pertinent right now. I mean, we do a lot of real estate incentives like cost seg and 179D, which is the energy efficient commercial building deduction, and 45L, which is a credit for developers of residential property. Gotcha. And those are key ones too, that you should, if you're doing anything with real estate, don't ignore them.
Gotcha.
Yeah, facilities, anytime you have big facilities, those cost segs are big.
Oh yeah,
big bucks for people, especially if you're remodeling them, and so you can take that. It's just huge.
All those things there.
So can I take you off track, Kenji? I used to ask questions, Randy. So I have an ERC question for you.
Yes.
Because my brother, who has a small business, calls me about this, and he's like, I just learned about this. How far back can people go and still get that credit, and how long do they have to do it?
Oh, you give me an easy one. I thought I was getting prepared for a tough question.
No. This is my brother's like, am I screwed? Like, how long? Like, I'm going to send him this clip, by the way, because he never believes me. So.
I love that question because this is part of the misinformation out there right now. People were being pressured saying, hey, you're about to lose this. You sign our contract now because we can get this done before the deadline. Our first deadline on filing the very first potential quarter for the credit is July 31st of 2023. So we have well over a year before we lose any ability to take any of the credit. The credit came into play March 13th of 2020. That's the first date we're eligible, potentially eligible. We have to look to see if you're eligible, but March 13th of 2020 was the first date you potentially are eligible. For most companies, the last date is September 30th of 21. So the third quarter, the first 3 quarters of 21. But if you meet the requirements to be called a recovery startup business, you've got the fourth quarter of 21 potentially eligible to you as well.
Yeah, which is why we call you instead of trying to figure it out ourselves as firm owners.
Yeah.
Well, and Kenji mentioned that this is not a 1 + 1 = 2 thing. And okay, we're done. Let's do it. There's a lot of interplay between this and other credits and incentives and PPP and idle loans and restaurant revitalization grants and FFCRA and FMLA. I could keep going on forever. And that state grants and all this. So you got to be very careful that you're not double dipping on incentives, but you usually can get a pretty good ERC, even if you've had these other incentives. And a lot of times we can still maximize. We just have to show that we allocated out these expenses to different things.
Yeah. I think
is the biggest haircut PPP on that?
The biggest haircuts PPP most likely, and it also just depends on what people use for forgiveness. If they use 8 weeks, it affects us a lot more when we calculate the ERC. If they use 24 weeks for forgiveness, we have a lot more flexibility. But the other one is R&D can have a very strange interplay with ERC, and the rules for R&D and ERC interplay for the year 21 are different in the first 6 months of 21 than they are in the second 6 months of 21. And not just R&D, other WOTCs in there, military credit, Indian tax credit, Indian employment credit. I don't know the names off the top of my head, but there's other credits out there too that have this change in interplay the second 6 months of the year.
Yeah,
it's in fact, I just wrote an article that's about to be published, but it's not published yet, so maybe I shouldn't say. Well, no, they committed. They had me sign, so it's going in AICPA tax advisor and one other place. So we're going to talk about that interplay.
Yeah, I mean, you're answering one of the questions I had perfectly, in advance. But I think this reminds me a little bit of like sales tax in the way of where I hear firms who are like, well, should I just launch a practice of this on my own, or do I have to outsource it? And they kind of start going back and forth. Well, maybe I should just do it myself. I feel like when I was going to ask and obviously you're there to partner with firms like ours and others, but just in hearing this described and trying to stay on top of all, it reminds me of like, is it for a traditional firm who's maybe doing CAS like we are, or maybe more traditional work, trying to spin up something around tax credits is really difficult. It sounds like, would you say you'd have to be a firm of fairly significant scale and size to really have your own tax credit practice? I mean, where do you see that delineation of when maybe someone should think about it, or like, hey, don't even worry about going there?
Yeah, so that's tough. With R&D, it's probably different than the ERC, because the ERC, you're not going to do it at this point. You're too far past it, so you're not going to spin that up. I spin it up in R&D practice. I mean, most of our people out in the field are engineers. First, you got to be committed to, I feel, hiring engineers as a CPA firm or tax firm or a CAS firm. Are you committed to that? They're a different breed, so we're all accountants, so we can talk about them differently. But well, I don't know, are we all accountants? But
yeah,
all right, good. All right, so we can talk about they're a different breed, but they're great. And so you got to decide that. We don't see many firms really under the top 100 that are trying to spin up their own R&D practice. We just, they have for sure, but we don't see a lot there. You'll see it in the top 100, but even that, we don't, I mean, what is it? 20% of those maybe have an R&D practice. I'm guessing. I could be way off, but I'm guessing it's not a lot. And I know, because we support a lot of those firms as well.
That makes sense. That makes
250 spots to go, Kenji, and we can get an R&D practice.
How about no? How about like, that just sounds like, why not call Randy? He sends us beer and He's already helped on one, a friend I sent over, but anyway,
And you did. I appreciate that.
well, but that's the kind of thing there too. You want to help someone. And I think we realize there is such good opportunities that are presented. I mean, again, this is the way to go out there and have tax savings, which always perks up business owners, and to do it in the proper way. And I guess, maybe getting back to, we'll kind of hit it again, but before we start rating our beers and talking about the beers again, you mentioned some of the pseudo sketchy, shady things going on around ERC. Kind of talked about that. What are other things to where I would say, because most other firm owners listen to this, what are some other things that people need to be thoughtful about if maybe they're like, let's say they're a CAS firm like we are, and you're in there doing the accounting and the books for a client, and you're hearing about, well, so-and-so is doing tax credits for us. Are there things that we should be helping our clients look out for? Like, hey, this doesn't feel right. Now I know it's a little bit different. I think about friends of mine who've been entrepreneurs who've had some horror stories around things like conservation easements. I mean, it's a little bit.
Everybody's getting
things like that.
Yes.
There's just been some things that have kind of gone really wrong for some folks. I mean, are there things that you would tell us as firm owners to be going, gosh, look out for these things, because this could be a way you could maybe help your client avoid a misstep?
Yeah, I guess besides ERC, and that's the biggest thing, is just if somebody's being promised a credit, make sure you look at it, or me. I'll give my number out to everybody. They can call me if they have concerns. Not that I'm no commitments. I just want to make sure your client's not taking something they shouldn't. Yeah. Besides ERC, with R&D, that's the next biggest one. And that's what we started as an R&D tax credit firm. So my passion, I can get real passionate talking ERC. R&D is typically that way too. And so what to look out for is, there's industries for sure. Construction industry, you can definitely see R&D tax credits. You can, but IRS hates it, and IRS will argue against it. And often what I've seen is they're very aggressive credits in that industry. Just a personal opinion, but I've seen credits taken in that industry. We've taken them in construction. They're definitely could qualify. It's more when you have a design build, type of project, mechanicals, potentially, new HVAC or electrical system or lighting system that has some uniqueness to it. Not just, okay, we ran these wires, but hey, there was a beam here, so we had to move these wires. That's not R&D. That's just a field change. It's more, let's design this to be maybe a little more energy efficient HVAC system, or let's design these new footers because we're in San Francisco and we're making this more earthquake proof. We want to see some uniqueness there. The other thing that happens is risk. You can qualify for the credit, developing a new or improved product, process, technique, formula, invention, or software. That's the categories called out. And I went through that fast, but you can slow down the tape when you run this. Have to have technology involved, some kind of science involved, have to have some level of uncertainty. This is where people eliminate themselves. The uncertainty doesn't have to be new to the world uncertainty. The uncertainty can be, can I do this better, faster, cheaper, more efficient, less waste, less operations? That's enough uncertainty. And then because there's uncertainty, I'm going to experiment. That's all great. Look at what you're doing. Do we meet those four? There's one overriding factor. Did I take economic risk on for this project? And that's where people miss a lot. And a key example of that is software development. If go back to the beer temple, if we were paying an outside developer to develop this new online store for us, and they said they could do this for 20 grand, and we don't have to pay them unless they deliver this successful project, the beer temple didn't take on the risk there. The developer did. Mm-hmm. If the scenario was reversed and the developer said, okay, we're going to do this for you, we're going to charge you $200 an hour, and you got to pay us, and hopefully we can make this. Well, now Beer Temple took on the risk. So that's the thing where people miss. So just be aware that, hey, meet the 4-part test, great, but also make sure you as the taxpayer are on the hook. If this wasn't successful, you're still on the hook to pay, or you're the one that's going to get hurt financially if it doesn't work. That's a key thing I'd be aware of.
Yeah. One last thing around that, I think about some of the documentation I've seen that, someone who's doing the tax credits appropriately really has to go through. Like it could be pretty rigorous. Are there things that, I don't know if I'd know exactly what to look for, but if I were like, okay, someone's going to come in and do this work, what, I don't know if it's like, okay, well, you would want that documentation to weigh this much and stack this high, or if it's, what things around documentation, Randy, do you typically, would you maybe say would be a quick way for, or at least firms to kind of get a sense of whether whoever's doing the credit really is going to do the proper documentation?
You are hitting the key things, because this is something I should have said right away, because IRS just last October 15th of 2021 came out with some new rules that are only for amended tax returns right now, but this will give you a good idea of what they want to see. So on amended tax returns, they now say that you have to identify every business component that the credit's based on. So you can't just say, I've got 5 engineers, they all did R&D, here's my credits based on these 5 engineers, wages of 100 grand each, $500,000 of wages, my credits 50,000, boom, that's it. People have done that, and it's probably not inaccurate, but you can't do that. IRS is now saying, and I'm talking fast, IRS is now saying that on amended returns, and I say this because my thought is they're going to do this on all returns once they see that this is working on amended returns. On amended returns, you have to identify every business component, which is the newer, improved product, process, technique, formula, invention, or software that the credit's based on. Identify each one individually. Give us a list. Also, give us a list on all those, let's say it's 5 projects, which employees were working on which of those projects. Name the employees at a minimum by title. But originally they said by name, but now they've pulled that back to by title. Who are the individuals working on each of those projects? What R&D activity were they doing on each project? And what uncertainty were they trying to eliminate? What were they trying to discover? That now is the new documentation requirement. We've always done this. This is how we've always expected that the documentation has to be out there, but that is now has to be submitted on amended claims. In my opinion, going forward, that'll probably become the norm as well. And that's because there are some sloppy credits been done out there that's just based on, hey, let's throw a dart. All right, we're probably pretty close. Let's take that onto the calculation of the credit. And probably if they do that, they're conservative, which is fine, but IRS doesn't like it. They want to see that documentation in place.
I mean, I listen, I mean, there's great value to be had out there in these tax credits. There's just some work involved. I mean, you got to do a little bit of work to get it.
Oh, yeah.
Yeah.
And you said it at the beginning. Sorry, you get me going here, Kenji. I can't help myself. You said it at the beginning. Our goal is to minimize the taxpayers' time, because we know they have no desire to be doing R&D tax credit documentation work. They want to do their manufacturing work, their software development work. That's fine. We're not there to be an interruption. We're there to take as much time off of this as possible for you. There's some time requirements we're going to need, and we're going to give you an ROI as we go. And if it doesn't make sense at some point, you pull the plug and we're done. You don't owe us anything. If we go forward, then you do. So it's a time intensive on our end. We try to minimize the time on the taxpayer's end.
Yeah. My favorite R&D story of all time. We were talking with the R&D person who's doing the study for storage labs. So one of our clients is trying to compete with Amazon's S3 storage, but they're trying to do it in the decentralized. So you literally do what Amazon does for storage, but on everybody's hard drives around the world, right? And they're like, tell us what you're doing that's new or innovative or challenging. And they're like, we literally don't know if this will work. This is 17. We're like, we haven't made it work yet. Come on, man. This is R&D.
Uncertainty is key. Documentation is just as key, though.
highly uncertain. That portion, yes.
2017 to 2019, those conversations with the client were they were like, come on, man. Don't ask me stupid
everything.
Questions. In 2020 and 21, it was fair because it was working now. They had kind of proved the thesis.
Yep.
It was pretty funny. I was like, this is going to just talk to the accountant. It's okay. Spend time with the accountant, resuscitate them, it was pretty funny.
Oh, that's cool. Yeah, I've got to see some. I don't go in the field at all anymore. My job is just speaking, like I said before. But man, when we started 15 years ago, I saw some really cool stuff going on out there.
Oh, there's
I'm
cool
sure.
stuff going on.
I'm
all the time.
sure. Now you just get to, speak and have beers with us, so there you go.
We do have to plug your podcast.
Yes, that's true. I was going to say, let's plug. Where can folks reach out to you or plug your podcast, Randy? And then we'll do some rating of our beers here. So
sure. So best place is, well, I'm on LinkedIn. I'm old, so LinkedIn. I'm not as active on TikTok or anything, although we are starting a TikTok. Do you call it channel? I don't even know. We have a YouTube channel, but bottom line is go to the website, tri-merit.com. You'll find all our information there. I am pretty active on LinkedIn, and I do, as Matthew just said, I have a podcast called The Unique CPA, and my podcast I interviewed 2 people ago was with Matthew May, and I am predicting it's going to be one of our most listened to episodes. So I'm really looking forward to airing that one.
It was
he is unique, Randy. Let's just say that. I don't like to give him compliments, but I'll say Matthew is a unique individual.
So, and Randy, I'm just saying, if Kenji tries to get on the podcast, his CPA is no longer valid.
I told Randy this.
It is not renewed.
I told him
mine is valid.
You're valid. All right.
So
that's what's unique about me. I'm inactive.
You're going to have an asterisk on CPA on the podcast if you have him on.
All right. Well, unique used to be CPA.
Yeah, that's unique about me, is I chose to go inactive. And if I have an asterisk on there, is that going to be like one of those like steroid seasons in baseball or something like that?
It's going to be like a Barry Bonds season.
Listen, we're Chicago guys. We're Chicago guys. So Sammy Sosa, okay, not Barry Bonds.
Well, I'm Seiya Suzuki right now. I don't know if I'm saying this first name right, but man, the current Cubs rookie is looking really good.
Looking
That's
good.
Great.
So, all right, let's rate some beers. Let's rate some beers here. I'm going to pull up. I've got let's see here. Vallejo already pulled up. I thought this was outstanding. I'm going 4 or 5 on this. I really like this, this beer. That's getting a strong rating from me, the 4.5 stars out of 5. Again, reminder everyone, come follow us on Untappd. Randy's on there. He hasn't been active in years on Untappd, but how many check-ins, how many beers were on there, Randy, when you looked just a minute ago?
I think, and I remember numbers, so I think it was 1,452. And I haven't really posted in about 5 or 6 years.
He's way ahead of us.
You're an early adopter on Untappd like us.
Yeah,
so.
we're gonna bring him back. We're gonna bring him back in the midst. We've connected with him. So if you follow us, you'll find Randy on there too.
Do Matthew, Randy next.
Do Randy next. Okay, Randy, what are you drinking again? He's
drinking the
Jungle Boogie.
Okay,
Jungle Boogie.
Yeah, by Marz, Marz. Okay. It's a Chicago brewery. I'm going to give a little story while I rate mine. Is that cool?
Please do. Yeah.
Okay, so Jungle Boogie by Marz, they're a small local brewery, really cool story, and I'm hoping I get this right, but they started kind of as an outlet for home brewers to brew their recipes commercially. And Ed Marzewski owns it, really cool guy, kind of like a community leader on the south side of Chicago, and has a radio station, a magazine, and his family owns a very highly rated liquor store and now a restaurant. So this whole thing, so Jungle Boogie, I don't know how many years ago, let's say it was 8 to 10 years ago, and it's probably not that long ago. They were trying to come up with this recipe, one of the home brewers, that would mimic citra hops, because citra hops was the big thing, a few years back, and not the easiest thing to get. And so what they wanted to do is get those very fruity flavors that citra hops would give you without having to use citra hops. So what they decided to do is brew a pale wheat ale. So it's a wheat. They're using wheat as well, and put rooibos tea in it. So the rooibos tea gave it like the tannins, gave it like the bitterness, which you need in any beer really. And then the rooibos tea, besides the tannins, gave it this fruity aroma and flavor. And so what that does is it just creates this really like cool apricot-y or peachy aroma and flavor. And it honestly is, at least for anybody in the beer industry in Chicago, it's a very iconic Chicago beer. So Jungle Boogie. And after that, there's no way I can give it anything less than 5.
5. Boom. 5. 5 it is. That's awesome. I cannot wait to have that. I might go sneak one of those after this, since you sent us some Jungle Boogie too. That's awesome. Matthew, you're drinking
Gorilla cookies. And I just want to say before I rate this beer, Randy, I feel like you see me. Like, I'm trying to figure out what's a 5, but I'm gonna go 4.75.
This is
because I'm having an internal
there's the
internal debate about what requires a 5. And I think, like, I'm trying to think. The only thing you couldn't do with this beer is drink like, this is a 1 at a time drinking beer.
Yes.
So does that limit it from the 5? I think it does a little bit, but like, this is a 1 at a time drinking beer, but it is a like perfect first beer to start a weekend. It is so it is what it is. So I don't know that it's a 5. I'm going 4.75. I think you already put it, but
I put 4.75. But that's well described. That's a
nice.
I mean, if I could have a second one right now, it would be a 5.
Wait, is that one gone?
Yes.
Okay, I can hear it in your voice.
Yeah, exactly. I know him well. This is when I
Almost.
like Matt. This is when I like Matthew best.
This is what they call Sunday Matthew.
So, yeah.
Nice. Yeah, I actually have not tried that beer, but I have that beer right here. And Matthew, after your review, I'm going to go split this with my wife and son as well. And my son's 28 years old, so he's not a teenager.
Okay.
So, all right.
Well, Randy, we appreciate you so much coming on. This has been great. We'll put some more information in the show notes where you can reach out to bring to catch up with Randy. Sounds like he's speaking all over the place. I'm sure you can possibly see him at different events and things out there. And I think we'll be reaching out to him again to get some more help on expertise and what we're doing here, from drinking beer and talking accounting here on Drink While You Think. Really appreciate, Randy, you being on. And don't forget, everyone, feel free to subscribe, drop us some comments.
Well, just an update on that, Kenji, just so everybody knows, we've now taken over the Acuity channel, the YouTube channel. So now it's just the Drink While You Think channel. So if you subscribe to this, all you will get is this. If you want accounting content, you got to go over to like the accounting tips and trips. Those are moving to the Acuity YouTube channel, but we kicked them out. So we kicked them out of this channel. It is now literally called the Drink While You Think channel.
Nice.
On YouTube. So subscribe to our podcast, subscribe to our YouTube channel. We'd love having you. And if you want to sponsor like Randy, all you have to do is send us beer, but it's important because Randy has now set a new bar. Like the big part about Saints beer is like, it has to have a personal story. Like, I love that this is Chicago beer.
I do too.
I really appreciate Randy in particular that you like, we're like, oh, Matthew likes pastry stouts. Like, let's pick this one from Chicago. I really appreciate it. So thank you for that and coming on. It's always fun to talk to you, man.
Well, thank you.
Very
And you
fun
know
to
what?
talk.
You guys let me talk about my 2 passions, taxes and beer. What could be anything better?
What could be better? What could be better?
Cheers,
Well, thanks for
everybody.
listening, everyone. Thanks for Randy for being on. Cheers.
Cheers.